What if I told you you can solve all of your funding problems with just 3 simple steps? I know it sounds crazy, but it is true. In this video, I'm going to show you my 3-step formula of how I was able to get over $500K in business funding and how you can use this same strategy even today to be able to predictably know which banks to go to at the right time and be able to leverage your credit in ways you didn't think was possible. So let's head over to my computer and break everything down. All right, we are at my computer, and these 3 steps that we're going to go over in this video will literally drown your business in funding. If you're new to my channel, maybe you are already subscribed. I hope you are. If you're new, I'm not just some random dude that's on the internet talking about this stuff. I've actually done it myself, and I've been all over the internet talking about it. 850 Club Credit, a podcast featured in a bunch of different publications as well. Digital Journal, Market Watch. I've been on the Modern Man podcast as well, talking about this strategy and teaching others how to do it as well. Again, I've gotten over 500K in business funding, and it took me almost 3 years to do that. And I want to show you guys how to do it much faster, because I want to eliminate the mistakes I made and be able to fast track you guys to getting the funding that you need for your business. It's not just me, okay, ladies and gentlemen. This is Haley right here. She is in our mentorship program. She was able to get over 80K in business funding in under 30 days. This is my man Gino. I believe this one's on the channel right now as well, so you can check it out after you watch this video. He was able to get over 200K in business funding. He's actually still getting business funding to this day. I believe he just got like 30K in funding a couple of days ago, so he's still using our strategies and working with us. This is Sarah right here. She got about 60K in business funding in 2 weeks. This is my man Amari. He got 70K in a week. This is Jason. All these people are kind of working more closely with us. But Jason, he was able to get over 60K in business funding, okay? And this was in, I believe, under 30 days for him as well. So again, guys, it's not just me. This works across the board. And we're going to get into how this process works and really how to be able to get this done. Now, the first question you have to ask yourself is, do you have a fundable business? And for most people in businesses, the answer is yes. This strategy will work for Airbnb, trucking, consulting, Amazon FBA, real estate, medical careers, which I know is becoming a hot industry right now, Turo, day traders, service-based businesses, event planning, drop shipping. Literally whatever industry you're in, this strategy can work for you. Now, you do have to be aware of the banking industry, and some of these industries that are on this list right now are in high risk industries. So you got to know how to kind of navigate that. And that's going to be something we show you and teach you here in this video today. Now, I want to go over what you shouldn't be doing. So the first thing is using your personal funds. I can't tell you how many business owners do this. It's definitely something that you do not want to do. And reason number one why you don't want to do this is if you commingle funds, you could lose your LLCs or corporations liability protection due to what is known as piercing the corporate veil. Okay, this is very important. Having your veil pierced sounds like a bad thing, and it is. All right, that's the whole point of us setting up an LLC, is because we want to protect ourselves and separate ourselves from this entity, this business that we're about to start. And you commingling funds, having personal funds in your business account and paying personal bills out of your business account, that's commingling funds. You can get into some serious trouble for that. The second thing I see people commonly doing is trying to build their business credit. Now, I'm not saying business credit is not important. It definitely is, and it's something that you can kind of kill 2 birds in 1 stone, so to speak, and we're going to show you how to do that in this video. But with building business credit, the problem is it kind of takes a long time to do it, right? And this is from NAV, everybody's favorite kind of business credit monitoring platform. It says, how fast does it take to build your business credit? Building significant business credit right away is unlikely, as it takes time, usually at least 6 months, to establish a credit history and demonstrate credit worthiness. So, this is kind of like getting that 30. This was kind of the old way to build business credit and get business funding. Getting the Home Depot cards and all that stuff like that. You don't have to do that anymore if you know how to properly leverage, okay? That is the key to this whole entire thing, is learning what to leverage, all right? And so building business credit, you can actually do it using the strategy and 3 steps we're going to go over in this video. You can do it at the same time. All right, and actually speed up the process as well. Now, hopefully you guys are enjoying the video so far. If you are, go ahead and smash that like button for me. Subscribe to the channel, hit that bell for notifications so you will be notified every time I drop a new video. And next, we're gonna go ahead and get into the 3 steps that we've been talking about in this video and show you exactly how to do this and lay this out properly. So step 1, effective targeting. Listen, long gone are the days where you can just apply online at any bank if you had a 700 credit score. These days, banks have complex underwriting criteria, and unfortunately, they won't tell you their process. So I know you guys know what this is or have seen this before. If you watch my channel, you know I preach this all the time. Leveraging your personal credit is the fastest way to get your business funded. And properly understanding this is really the key, because you know, it's one thing to have a 700 plus credit score, but if you don't have the proper optimization in these categories that we're going to go over, it's not going to go well for you. Also, a quick nugget: when you're checking your credit, make sure these are the 2 recommendations for you. If you don't listen to nothing else in this video, make sure you know this: Experian or My FICO. Okay, you need to know your actual FICO score. Most people are just checking Credit Karma, or they're looking even like TransUnion and Equifax. Like if you have like an account with them, they even only show you what's called a Vantage 3.0 score. All right. And the problem with that is no lender pulls that. All right. So one thing I want to touch on in this video is utilization. This is very important. I'm not going to go too deep into it because I have an entire whole other video on it. I'll link it up at the top right here that you can check out, and I'll have it in the description as well. So if you have like utilization problems, once we talk about this, you can kind of learn how to fix it. But utilization is very important. Banks look at this heavily. Okay. And so with utilization, a lot of times think, oh, well, if I'm under 30%, I'm good to go. No, when it comes to business funding, you need to be under 10%. That is the magic number. The closer you can get to 1%, the better. But again, as long as you're under 10% at least in terms of utilization, you're going to be in a good spot. All right. And it doesn't mean just, you know, under 10% for each card, right? And this is kind of what this analogy is going over right here. This person has, you know, balances on all 3 of these cards. All 3 of these cards have different limits, meaning the utilization ratio is different across the board. Literally, all you do is take the total credit limit number, times it by 10%. So 0.10 in your calculator, you'll get what the balance needs to be for you to be at 10% and then get there. That is really that simple. And that's the calculation that you need to know. But again, utilization is extremely, extremely important. Now, this is an ideal credit profile. I'm not saying you need to have, you know, 74 accounts and all that stuff to get funding. But again, this is kind of ideal situation here. Okay, this person does have a 774, which is great. They have 74 total accounts. Really, the key factors here is length of credit, the utilization, no derogatories, and low increase. Right, these sections right here. This is what banks are really looking at. Length of credit shows that you've had the ability to manage credit for a very long time. Now, you don't need necessarily 10 years. Once you get past 2 years, you're kind of pretty good for the most part. Some banks will do up to, you know, as low as 1 year. But really, when you get to 2 years, you're in a good spot. And then past 5 years is when you really won't have too much problems getting business funding, leveraging your personal credit. Increase. This is very important. This is what allows you to look thirsty for credit if you have a lot of increase, and not so much the total amount of increase, but the increase in a 3 to 6 month period. That's what the banks are typically looking at, is how many increase or new accounts do you have in the last 3 to 6 months. Missed payments, this is really, really important. This kind of goes into the whole derogatory thing. You don't want to have any derogatory. So no collections, no charge-offs. If you do have late pays, as long as they're older than 2 years, you will be okay for most banks. But if you cannot have any, that's obviously better. But especially collections and charge-offs and stuff like that, or BKs, you don't want to have any of that stuff reporting on any of the 3 credit bureaus that you have. Now, I know sometimes people watch these videos and they're just like, man, look, this is a lot. I don't have time. Maybe you're already in business, everything's flowing, and you just don't have time to kind of put all this stuff together. You can click the link in the pinned comment or in the description. You'll be able to book a call with us. We'll sit down with you, analyze your business, kind of see if we can help you build all this stuff out, do a lot of this stuff for you, get you connected with the banks that make sense in your area and all that stuff like that, and get you funding guaranteed. All right. So if that's something you want to do, you kind of just want to fast track this whole process, you can click that link in the description. And really, ladies and gentlemen, the whole part of the personal credit thing is just predictability. Okay, that's what you need, and you get that by understanding what a fully optimized credit profile is and how to obtain the data points from the banks. We're going to be going over that here soon, and this allows you to remove all the guesswork from the equation, and it stops you from randomly applying to banks and hoping for the best. That's typically what people do, right? They just maybe watch a couple of videos. They just think, oh, my credit is good, I can go to this bank or that bank. It's not how it goes. It's a lot deeper than that. You can have great credit and go to the wrong bank at the wrong time, right? You can be in the wrong industry and go to the wrong bank. Maybe they don't like it's so many things that go into that. And you got to know what each bank wants to see, because, again, it's different compared to your credit profile, your industry, the bank. It's a whole bunch of things that go into that. And we're going to be kind of educating you on a lot of that stuff. Now, step 2, bank verified structure framework. Now, remember how I said the banks won't tell you their process? Well, we have a way to beat it. And I know I'm not the only person that hates to feel nervous, anxious, or unprepared walking into a bank. And you literally shouldn't have to. That's because you should know exactly what the banks want, what scores they want to see, and how your profile should be optimized specifically for that bank before you even walk in. Now, I know we talked about the industry stuff earlier in the video, but NAT codes, this is really, 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 really important. Okay, I can't stress enough how important your NAT code, your industry, your business, and all that stuff is, because high risk industries are a thing with banks. There's certain industries that certain banks don't like to fund, right? I'll just name one: real estate, right? Code 53. This is a high risk industry for most banks. And so what that means is sometimes banks, doesn't matter how good your credit profile is, doesn't matter how much revenue you can show, all that stuff, like they'll just deny you, right? There's a lot of banks like that will do that. So you got to be aware of that ahead of time and know how to navigate it. All right. And how you do that is knowing your NAT code. Okay, so you can change these. Okay, this is something that you can definitely change if you're in a high risk industry. You want to kind of navigate around it. You can definitely change this. It's not something that you have to be in. Also, your LLC name or S corp, C corp, whatever you have, the name of your company, your entity, that can be a red flag as well. If, say, you're in real estate and you got realty in your name or stuff like that, that can cause problems, especially if you're like a startup too. This is really where you have to pay attention. If you're more seasoned and stuff, you can maybe get around it, but especially if you're a startup, you want to remove all the friction in terms of you trying to get business funding to get started. And so my recommendation is have a very clean, minimal business name. Okay, just something that you really can't tell what it is that you do. All right, you don't have to spell out what you do in your LLC name or your entity name. All right, now I know a lot of times people they maybe they got the utilization part on the personal side, but the business side is just important. When you're dealing with these banks, they pull business credit as well. It's not just personal; they're going to pull the business credit too. All right, so if you already have existing business funding, maybe you have some business credit cards, lines of credit, maybe you got a term loan, SBA, whatever it is, you got to make sure, especially with the credit cards and line of credit, because those are revolving, you got to make sure that utilization is low there too. Now, it doesn't have to be as low as the personal. Recommendation there is to have it at least under about like 40 to 45% at least. But again, they're going to look there too. You can't have maxed out business credit cards or, lines of credit. Think you're going to get some more business funding. All right. So these are some of the major business credit scores to kind of be on the lookout for. Duns and Brad, everybody knows this one. The Paydex score, that's very common. With the Experian, they have the credit ranking and telescore. And then you have Equifax, which is the business payment index as well. Then you have FICO, which is the liquid credit SBSS. And then you also have the SBFE, which is the small business financial exchange. That's another one that sometimes banks pull. So you guys got to be aware it is. NAV is a great place. We'll have a link for that in the description as well if you want to get a free trial to Nav if you don't have that. But Nav is a great place to check your Dun & Brad payday score, Equifax business payment index as well. That they have that stuff on there. You can really kind of line up and see what these numbers are actually looking like. All right. And then also two UCC filings. Those are kind of big as well. They're not necessarily bad, but if you get like a term loan, sometimes certain banks, they will put what's called a UCC filing on your business credit profile, and a lot of banks don't like those. Okay, so that's something in addition you want to kind of make sure you're aware of, is making sure you don't have any UCC filings on your business credit profile. So a lot of people ask me, where can I go to figure out where the banks pull and all that stuff like that? Two things. So the first thing is you can use what's called Doctor of Credit. This is a website. I have a link for it in the description. You can go there and kind of see some of the bigger banks, where they pull based on your region, because sometimes they can pull, any of the 3 bureaus depending on where you're at in the country. Also my YouTube videos. Okay, I drop extensive videos on a bunch of different banks, give you all the data points, and I tell you where they pull from as well. And you can probably tailor the framework of your business to match the underwriting criteria of the banks. That's the whole point of this 3-step formula, which I call the Omni Growth Strategy. This is something that I created myself, so you won't be able to hear it anywhere else. But again, with this Omni Growth Strategy, that's how you're able to kind of match the underwriting criteria of the banks. And this allows you to all but guarantee approvals because you're a direct match for the banks you are applying for using the data points from them. Step 3, build strategic banking relationships. Why this is so important is because banks want to know you and your business to build a connection. And this connection allows you to get access to more financial products and get higher approval limits. So with building strategic relationships, this is very important. This is like going into the branch instead of applying online. Getting or meeting your business relationship manager, branch manager, stuff like that. I know a lot of times people are scared to go to the bank, but if you're planning on doing this on your own, this is how you got to do it. You got to build these relationships, get in there. Also, in addition, understanding the data points, which we've been talking about. And as you see here, this is on Experian's website. Okay, they're even talking about relationship banking. PNC, for example, has a relationship banking service called PNC Choice Banking, which provides customers with relationship managers, lower interest rates on credit cards, and the option to work with the PNC investment team on strategies to reach long-term goals. And this is what the bigger banks are trying to do. They're trying to adapt that credit union model of relationship banking, knowing who the business owners are, like the whole nine. Okay, this is what all the banks are trying to go to, and I'm trying to get you guys ready to go with it too, because that's just where it's going. And so this is my man Mitchell, somebody that we worked with in our program. He was able to get $80,000 in about 3 weeks. Again, using all these 3 steps and these strategies and everything we're talking about in this video on this YouTube channel, he was able to get $80,000 in 3 weeks leveraging these strategies. And this is Lenore right here, another person that we've worked with in our mentorship program. Literally, she got started in, I think, the first 48 hours, she got like $24,000, right? Literally like that immediately as soon as she got in, right? So that was her situation. Still working with her to this day. This funding process can be very fast if you actually are ready to go, okay? But that's the whole point. Fast tracking this process so you guys watching this video can do it at an extreme rate if you are ready to go and can kind of follow everything that we teach here on the channel. Now, really quick, I know a lot of people ask about working with us and kind of like our process and all that. I want to give you a kind of behind the scenes look at that. This is the Pro Growth Funding Plan. And as you see here, just for clarity, the red is done for you. The blue is what you kind of do on your own. And the green is done with you. All right. So starting point, most people that come to us, they either have a limited funding or they don't have enough funding or they don't have any funding at all. Maybe they just started or they've been in business, they've been self-funding, whatever it is. Right. So the first step of the process is you enter in our Omni Target system, which is an AI system that I've built. And we've been able to literally take the guesswork out of this entire process. As soon as you start, we can identify based on your data points and all that stuff, which banks are going to make the most sense based on your area of the country, your credit profile, your business industry, all that stuff. Step 2, you're going to obtain your personal credit reports. Okay, this is very important. We talked about the FICO stuff and all that. We get all that, analyze everything from top to bottom of your credit profile, see what's going on, see what's going to make sense. Okay. And then step 3, we're going to build your business structure and framework. So again, getting you ready for the banks in the Omni target system that we just talked about. We're going to have the banks ready to go, and then we're going to get you ready for the banks. Okay. Having the data points, knowing what they want to see, the whole entire 9, get you ready to go for these banks so we can maximize the shots that we take. Okay. And then step 4 is creating a custom funding plan with the data points. So we'll have a custom to you funding plan based on all these parameters, and then if available, we connect you with the bank contacts if we have them available at the banks in your plan. So in these situations, you don't even have to go to the bank. So again, if you have a 680, 700 credit score, you kind of just don't want to do it on your own, you just want to work with us and have us help you do it, go ahead and click the link in the description. You'll be able to book a call with us. We'll sit down with you, analyze everything, see if it makes sense for us to build this out for you, work with you one-on-one, and kind of get this ball rolling. Again, this is an investment. It's not free, unfortunately. Now, I hope you guys enjoyed this video. Go ahead and smash that like button if you enjoyed the content today. Subscribe to the channel. Hit that bell for notifications so you will be notified every time I drop a new video. And if you want to continue to learn how to fund your business on the channel, go ahead and watch the video that you see on the screen right now. This is a recent video I did where I show you the best banks to fund a new LLC. This can work if you are new to business and you just set up your LLC, or maybe if you've been in business for a while and you still need some banks to get your business funded. This video is for you. So go ahead and click that video, and I'll see you in that one.